Happy Friday, everyone. Thanks for joining us today on this edition of Business Daily. I'm Lee-Jiun in Seoul. Let's get started with a look at the day's highlights. Korea reports a second straight budget surplus for the year of 2016 on the back of a rise in tax revenue from increased corporate taxes and VAT. Britain's Prime Minister Theresa May seems to be on course to trigger Article 50 by her target of early March, while a far-right leader in France hails Brexit. These stories and more coming right up. Korea's budget balance for 2016 ended in the black for the second straight year due to a record surge in tax revenue, thanks to more domestic spending and strong corporate performance. Our Shin Se-min starts us off.
The government will employ more aggressive and efficient fiscal spending this year to ensure uncertainties at home and abroad do not spread to the country's real economy. This is what Finance Minister Yoo Il-ho said on Friday while announcing Korea's budget settlement for last year that ended in the black for 2 straight fiscal years, coming in at $6.9 billion. It's the second surplus after logging a budget deficit for 3 years since 2012. The finance ministry says that the country collected nearly $300 billion in revenue last year, with expenditure staying at $288 billion. Compared to the year before, the government saw an added $21.4 billion in tax receipts, the largest on-year growth ever, and $8.5 billion more than expected.
Despite the poor economic sentiment followed by the corporate restructuring drive, the government's active policies, like implementing a supplementary budget and front-loading the budget, helped the country secure tax revenues with more stability.
The government says much of this stemmed from increased corporate tax revenue and the booming property market. Corporate tax revenue was up $6.1 billion on year. Breaking it further down, the value-added tax that includes that of private consumption rose by around $6.7 billion due to growth in domestic demand and poor exports and facilities investment. Custom duties, however, slumped by $430 million on the back of slowing imports, while tax revenue from interest income dropped as the country's key rate was cut to a record low of 1.25%. In terms of expenditure, the government increased spending by over $11.1 billion. Looking ahead, the finance minister projected the tax revenue surplus for this year will come in at roughly half of last year's, as some of the gains seen from the busy property market and low oil prices are seen as temporary factors. Shin Se-min, Business Daily.
Fearing the foot and mouth disease outbreak in the country may lead to a greater hike in livestock prices, the government has vowed to do all it can to expand supply and maintain price stability. This is according to the first Vice Minister of Strategy and Finance, Choi Sang-mok, who chaired a government-wide emergency response meeting on Friday. He said the government is also considering boosting imports if necessary, while paying closer attention to the change in prices of processed goods and strengthening monitoring of distributors to prevent hoarding. The wholesale price of beef and pork has surged roughly 10% this Wednesday from about 8 days earlier. Korea raised the country's foot and mouth disease alert status to the highest level on Thursday after a second strain of the disease was confirmed 3 days after the first outbreak. Korean shipbuilders are proving their competitive edge in building floating storage regasification units, or FSRUs. The latest winning bidder is Hyundai Heavy Industries, which secured a deal from a Turkish consortium to build up to 2 units, each worth an estimated $230 million. In recent weeks, Samsung Heavy Industries won a similar bid from a Norwegian firm, and Daewoo Shipbuilding and Marine Engineering secured a bid to build up to 7 units worth up to $1.6 billion in a deal with U.S.-based Accelerate Energy, the world's largest operator in the field. Now, together, Seoul's 3 major shipbuilders have built 18 of the world's FSRUs. The units facilitate the transfer and processing of liquefied natural gas at sea, which is easier and cheaper than on on land, and the market is growing. Some 55 projects are expected to be issued through 2020, mostly from developing countries with massive energy demand. And moving on to markets, to give us a wrap-up of this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Thanks for having me.
So as we close the week, how are things looking on the last day of trading?
The Korean equity market was mixed on the last session of the week. The Kospi rose by 0.45% to close at 2075.08, while the Kosdaq fell by 0.08% to close at 610.58. The U.S. stock market enjoyed a decent rally overnight, helped by U.S. President Donald Trump's announcement to cut corporate taxes going forward. Positive sentiment tickled over the Korean market, and institutional investors bought massive amounts of shares to lift the Kospi index. Most sectors rose on the Kospi market, and most blue-chip stocks enjoyed a rally as well. The Kosdaq market, though, opened the session with a slight uptick, but erased early gains during the session. Retail investors were the only net buyers on the Kosdaq market.
Then how is the overall weekly performance? I mean, both indexes didn't seem to move much.
That's right. On a weekly basis, both the Kospi and the Kosdaq market were mostly flat this week. Since foreign investors unloaded large amounts of shares on a weekly basis, most blue-chip stocks were sluggish. On the Kospi market, retail investors were the only net buyers. The Kosdaq market had enjoyed a 0.3% rally until Thursday, helped by better earnings results by internet and game companies. However, the market lost its steam somewhat due to today's drop. By sector, shipbuilding, securities, and telecom companies performed strongly, while daily staples, semiconductors, and utilities performed weakly.
And the U.S.-Japan summit is drawing a lot of attention in global financial markets as well. So what should be the focus from a market perspective?
The foreign exchange, or the FX market, is keeping a close eye on Japanese Prime Minister Shinzo Abe's Friday meeting with President Trump. Many investors in the market are closely watching the summit, especially after Trump accused Japan of unfairly influencing financial markets and the yen to help its exporters beat U.S. companies. Therefore, the summit will give hints on whether Trump actually wants to see the value of the U.S. dollar fall or attract more investment from Japan. The results of this summit might affect monetary policies of both countries going forward. The U.S. dollar strengthened against major currencies on Thursday, seeing particular gains against the yen. This has been Choi Jin-seok for Business Daily.
U.S. foreign direct investment in emerging markets like Korea is likely to drop below $390 billion this year, curbed in part by the Trump administration's protectionist trade policies. The Institute of International Finance, a group representing hundreds of the world's biggest banks, hedge funds, and other financial firms, says U.S. FDI would be down nearly 30% from just 3 years ago, falling to the lowest level since the 2008 global financial crisis. The report suggests it will be another difficult year for emerging markets that have already been battered by slowing growth in China and sliding commodity prices. The institute said countries like Korea, China, and Mexico, which are highly dependent on the U.S., will be the hardest hit. Time now for a closer look through some major events that impacted business sentiment on the global market. And for that, we're now joined by Eunice Kim in the studio. Hello, Eunice.
Hello.
All right, so there were some jitters out of Europe this week, political in nature. But of course, the continent is looking at some major events this year.
Absolutely. You know, a surge in the popularity of far-right candidate Marine Le Pen was one of those. In France, it raised anxiety of a possible Frexit. This is over in the UK. Prime Minister Theresa May's Brexit bill successfully passed the lower house as her target date to trigger Article 50 is now less than a month away. Take a look.
The ayes to the right, 494. The noes to the left, 122.
After a week of parliamentary debates, the United Kingdom's lower house has greenlit Prime Minister Theresa May's Brexit bill. It came after May offered a concession to allow Britain's MPs to have a yes or no say on the final Brexit proposal before it's taken to the European Union. For now, the bill heads to the unelected upper house, the House of Lords, where the ruling Labour Party does not enjoy a majority. The first debate is scheduled for February 20th in 10 days, with the final reading set for March 7th. That is very close to the May government's reported target date of March 9th to trigger Article 50 at a scheduled European summit that would begin the two-year countdown for negotiations. The UK sterling, which had significantly weakened against the greenback since last summer, has been clawing to recover since the start of the year. The UK economy has been outperforming expectations and indeed finished 2016 with the fastest growth among its advanced economy peers. But economists are suggesting early signs of a slowdown, pointing to retail sales indicators that signal potential fading. Meanwhile, the euro took a step back this week, dropping by 1.4 percentage points as political uncertainty reared its head, raising further nervousness on the future of the European Union. The EU's third largest economy, France, has presidential elections coming up in late April, and far-right National Front leader Marine Le Pen formally launched her campaign, promising to resist globalization and stare down Islamic fundamentalism.
Those two ideologies want to bring France to its knees. On one hand, the ideology of globalized finance, of commerce only. On the other hand, fundamentalist Islam, the ideology that is all about religion. Against these two totalitarianisms which threaten our liberty and our country, there's no time to be indulging in optimism. There's no room for cowardice. We must force ourselves to be as lucid, as determined, and as united as possible.
It is too early to tell what Le Pen's chances of an actual victory are. But with former favorite Francois Fillon now embroiled in controversy over employing his wife as his assistant for 15 years, it looks to be anyone's game.
Now, this Marine Le Pen, in many ways, is viewed as French Donald Trump. And of course, her party, the Front National, has been on the political sidelines. But now it has been rising in prominence, I guess, riding on this rising nationalist sentiment that has been spreading across many countries.
That's right. And as you heard in the report, Le Pen actually did call globalization and Islamic fundamentalism as the two, quote, totalitarianisms that she would fight. She's also pushed for Frexit, or for France to leave the European Union and the euro altogether, all along. But it was also the campaign of her opponent, the hit that conservative candidate Francois Fillon took, that really made investors nervous. Polls pushed the early favorite down to third place after a satirical weekly accused Fillon of hiring and paying his wife as a parliamentary assistant, and that she allegedly did not properly complete the work. The country's financial prosecutor is now investigating, but Fillon has adamantly denounced the claim of misused public funds and committed to seeing the race through. France's two-round election begins on April 23rd, followed by a runoff in May should there be no majority winner.
Well, will definitely be an interesting race to keep our eyes on. But before we let you go, let's get an update from the United States. President Donald Trump is set to meet with Japanese Prime Minister Shinzo Abe on Friday in Washington, D.C., but followed by a weekend at Trump's Florida resort.
Right, and Japan's Prime Minister Shinzo Abe is set to be the first head of state to be hosted by the new U.S. president at his Mar-a-Lago resort in Palm Beach. The White House has said the visit will be paid by Trump, who has said golf is a better way to get to know someone than lunch. But first, on Friday in D.C., the two leaders will talk business. The former real estate mogul is known to have been a consistent critic of Japan, so Abe, traveling with his foreign and finance ministers, is expected to do his best to smooth out a good foundational relationship. He's also expected to come with a package of private and public investment that Tokyo says would create 700,000 jobs in the the U.S. This as Trump's immigration ban we discussed last week has been put on hold by the U.S. courts, which so far has agreed it runs contrary to America's constitutional democracy. So it could go to the nation's highest court, the Supreme Court, as the new U.S. president has insisted that it's key to protect America's borders.
We are a nation of laws. And as I have said, as we have said, from day one, that those laws apply to everybody in our country. And that includes the President of the United States.
Well, we'll keep our eyes on what comes out of that meeting.
The courts and the U.S. versus the U.S. president, right?
Thank you so much for coming in today.
Sure thing.
And that wraps it up for today and this week. Thanks so much for watching. We'll be back next week with more at the same time, same place for your Business Daily. Until then, goodbye.